why does the US need a strategic reserve when it's the world's reserve currency? It's nonsense. It's just Trump making Trump sounds. There is no reason. You are the world's reserve currency.
Mm.
The US doesn't even talk about its gold holdings. It's a legacy thing.
But you've got trillions and trillions of debt. And is that not a way of basically saying, don't abandon the dollar because we've got reserves in gold and we've got reserves in Bitcoin?
The world is so indebted dollars that dollars always in short supply.
Yeah.
So anytime the world slows down, the dollar goes up. Anytime, it's just, there is a desperate need for dollars. I mean, what happened to China? They needed dollars. What the US did was agree via Japan intervening in the currency to inject dollars back into the Chinese system.
Yeah.
So I don't think that they need to do anything. And the argument, look at the size of the debt. No shit, Sherlock. We know what they're doing. They're debasing the currency to pay for the debt.
Yeah.
That's the privilege of having the world's reserve currency. You could force an 8% annual purchasing power depreciation via debasement, which is basically, I think of it as a put option on implosion. So I don't know what you'd pay for the option, a put option on, let's say, equity markets falling 50% plus and most markets falling apart. That's what, if you get the big reset, the big, thing, okay, that's what happens. Well, what we're doing instead is we're basically paying them to take away that downside or an 8%.
By debasing money.
Yeah, it's an option cost.
Yeah, it's quite an expensive one as well, right?
It is, but, I'd rather pay 8% than I would just see markets down 80.
And it's 8% that you don't actually see yourself paying.
No.
You see it as an asset inflation, basically. Right?
That's right.
Yeah.
That's right.
Yeah.
Your future self gets poorer because you can afford less with your income. I was thinking about this, actually. When I first bought my first flat in London, I think it was like £265,000 back in like 92. And I was thinking my salary was probably 70, 75. So that wasn't
5x.
5, or maybe my salary was 80 or 90, whatever. It's about 3.5, 4x.
Yeah.
That same flat is probably 1.5, 2 million.
Wow.
And I don't know, two-bedroom flat in Bayswater on a nice square. It's probably not far off that. And I don't know what the average kind of 20-something investment banker earns as they're starting their career now, probably 200. So it's gone 10x.
Yeah.
And that's debasement. I mean, I don't think we're in a dollar bull market environment right now. I think the dollar moved quite a decent amount. It got down to that 100 level. It's like, no, thank you. And it's...
it was due about. It was definitely
you've
due
now
about.
got closing of positions and all of that stuff. And, currencies, when they trend, they really trend. But also you get these periods of sideways consolidation or, retracements that can last a while. So I don't see the conditions for a strong dollar. Yes, as you said, there's this mismatch. And now everyone's like, well, the Fed can't really cut and everyone else is going to cut more. And then that narrative will change. So I just think it's kind of caught in no man's land right now.
Yeah, I mean, the seasonality for the dollar is usually quite bad into the end of the year, just like it's quite good for crypto as well.
Yeah. The other thing is interesting to me is the rates market. The rates market is like utterly convinced that rates can't come down and that every opportunity it sells off. But when you just look at the CPI prints, every single one is lower and has been for 2.5 years. And even the one that came out today, 2.4, it was like, oh my God, it wasn't 2.3. But then you look at the previous one, it was 2.5. It's like there's this disinflationary trend, but the rates market just doesn't want to believe it.
Yeah. Well, again, I mean, interested in your thoughts. Got so many people send me the chart of 70s inflation.
I write that in GMI every month. I put that chart up as a joke to show how often it's been posted.
Yeah, really. Yeah. and like, I mean, Lynn Alden's like written some really good stuff around comparing actually more to the 40s. I think you've kind of written about that as well. Are you still of that view? I mean, we
put Julian Patel and myself put up that chart of we call Mount Fuji, which is all of the 5 major inflation incidences. It's exactly following that. It's a normal disinflationary process after a spike of inflation driven by a supply shock. The post-war period was identical. So the only one that was different was the 70s. And, there's this whole group of people who just want to believe in that rates should be higher, everyone should pay the price, the market should collapse, you should buy gold, right? There's a whole group of people who want their justice, and they've been baying for it since the 90s.
Yeah.
And that's what the people posting that chart, when you actually go down and look at it, they're gold people.
Yeah.
So what happened in that chart? A lot of it say, well, it was Arthur Burns, he screwed it up. The reality was, it was, 1970, 76, 77, we started getting the second spike, right? 74 was the first one. Well, that was the baby boomers hitting the workplace for the first time. It was a demographic issue. And that's what everybody misses every time. Yes, I'm sure there's some monetary stuff going on, blah, blah, blah. But really, it's
you're saying it wasn't Burns as much?
No, you had like a 20% of a population all coming to the workforce, earning money at the same time.
Yeah.
Of course you're going to put up prices.
Yeah.
I mean, everything goes, and that happened on a global basis.
And you know, the force of AI is so disinflationary. It's unbelievable. Like, I mean, it's insane.
Well, we had Stefan Rust from Trueflation in here a few weeks ago, and like
he's an inflationist.
Yeah, he is.
He is. He's an inflationist.
He is. But Trueflation right now, I think, has inflation around 1.6 or something like that.
Yeah,
so
it went down to 1.1.
Yeah.
2 weeks ago.
Right. Okay. Yeah.
But you've got to love what he's doing.
You've
got to love what he's doing over there, though, right?
I do. It's really cool.
Yeah.
But nobody cares. And not that. Yeah, I follow it.
But in the future, don't you think people will care?
No, because governments want control.
But more and more people think the government's like
they've always
lying,
thought that.
Right.
My entire career, they've always thought they're cooking the numbers.
Right.
And they probably are.
Yeah.
But the problem is markets trade on that.
Yeah.
Yeah, so the question is, are markets ever going to care more about what Trueflation is saying than what the official data is saying? That's the question.
And that's a hard call. And we've seen a lot of this kind of stuff in the past. Yeah, I love their methodology, but we've had that whole Harvard thing with 1 million prices. Well, nobody cared. I mean, just everyone's been like, we're going to expose the government and how they calculate inflation. Nobody cares.
Would you, on the inflation theme, are you still leaning towards that there's a risk that we go into a deflationary world, or at least
I think the world is deflationary overall.
Yeah.
Yeah, I think that's the issue, is the world is deflationary because of technology, because of an aging demographic. I don't see any reason why it's structurally inflationary. And when you look at, we produce all of the demographic charts versus, long-term CPI, labor force participation rate, all of this, it doesn't stop.
Yeah.
Now, until the labor force participation rate increases because of AI and robots, which we're too early for that yet. So I think that economy structurally changes, maybe 2030 onwards, we're in a whole new paradigm. But right now, all I can see is disinflation over time. I don't really see a difference. People are like, well, immigration, the UK's just had its largest increase percentage-wise of immigration in history this year. How can that be inflationary? The US has had a huge influx of immigration. Before, there was a bit of wage pressure because immigration policies were tight. But they've opened that. And then you've got technology. So I just don't see it.
Yeah. And how do you respond to then, because I completely agree, and I think structurally we're still in this disinflationary world. How do you respond to people that will say, well, isn't Bitcoin the inflation hedge?
Everyone confuses inflation and debasement.
Yep, exactly.
Inflation is CPI, which is the rise of goods and services. That is nothing to do with, and this whole monetary inflation, if they just stop conflating the two things into one, they said there's inflation, which is usually a cyclical phenomena, and then you've got an occasionally structural because of, let's say, population or whatever, and then you've got debasement, which is a whole different game, and that's been going on. What is an asset? An asset is future deferred consumption. It's something you buy today, you get rewarded for locking up your capital by excess returns for the future, and for that you can spend it in the future. Now, what's happening is our future selves are getting poorer because you can afford less. The investment banker, 25-year-old investment banker now can buy a fraction, well, he can't even buy the house because you can't even get the mortgage on it anymore. So then you're missing out on that whole rung. And if you look at the stats of home ownership of 30-year-olds, it's collapsed if you compared it to 1983. All of the stats just show that they're just going to miss out on a big part of economic life, which is why so many people are driven towards speculative assets, because it's the only way of making it up. When you speak to somebody, I had this conversation today or yesterday, I'm like, you know, why don't you invest in the S&P 500? They're like, how much does it make a year? 8%. And they're like, I'm fucked. I'm never going to make enough money to retire or do anything. So therefore, they move to Bitcoin. Now what's happening, it's really interesting. Go and speak to a 33-year-old now and say, so, you know, I presume you're long Bitcoin for the crypto cycle. They're like, fuck that. 4x? Never going to make me enough money. I need to make 50x. If you speak to the average millennial now, they're under pressure because they're getting married. Some are having kids at the lowest rate in all history. And they haven't got a house, so they're trying to get a house. And so it's pushing them, as they get towards their 40s, that it's pushing them to become more speculative, not less speculative. It's like, we need to move forwards with our lives.
We need to keep pace with the debasement.
That's the other thing about Bitcoin is people don't really, we all get so in the day-to-day stuff. Really, what we've created is a globally homogenous asset.
Yeah.
Right, you were in FX market. We think of like FX as globally homogenous. It's not. Go to a rice worker in the Philippines. They have no chance of buying dollars or pounds or anything.
Yeah.
So it's not a product. Gold, yes, but the bid-offer spreads are so massive. So this is the only one, and it's fractionalizable. So whatever you earn, you can put 10% of your income in.
Owning out of the money call spreads in things like ETH and Bitcoin offer you such good leverage to that move. And you're getting like 10-to-1 type payouts on that stuff. So instead of like people worry about being under allocated to crypto or whatever, or they've got to jump through all these regulatory hoops and stuff. I think owning it via those sort of upside structures is just the biggest no-brainer.
And we've seen volatility come down, like Bollinger Bands have got to the kind of super low levels.
So that means we're coiling basically in price.
And every time it's got to these kind of levels, we've seen price explosion to the upside. And as volatility comes down, it just becomes super attractive in this kind of stuff. I mean, I trade a bit of options, not a lot, but I trade them on Deribit, obviously. But yeah, I mean, look, everything is in place. The only thing that we were talking about this earlier, Dave and I, was like, the concern is we all think it's likely to break to the upside and go fast. And the issue is where is the capital flow going to come from? So if we're stepping away and want to give ourselves a counter argument, is everybody's looking at each other to say, well, when it breaks, the market's going to go higher because it's going to bring in all of the FOMO. But it needs to break higher to bring in the FOMO.
That's right.
That reflexive thing needs to start. And every time it's got to the top of the range, it's come back down. And now whether that's because of some flow we don't know, FTX estate stuff or whatever it is that keeps slotting at the moment it gets to the top of the range. But I don't know if the crypto market itself has much dry powder. Everyone's all in.